Good morning, children. Welcome to Accountancy Digital class. Today in this class, we are going to see about retirement and death of a partner. Children, in the last class, you had studied about adjustments required on retirement of a partner, distribution of accumulated profits, reserves and losses. Now we will see how to revalue the assets and liabilities. When a partner retires from the partnership firm, the assets and liabilities are revalued because the current value may differ from the book value. There are two ways of revaluing the assets and liabilities. Revised value of assets and liabilities are shown in the books. Revised value of assets and liabilities are not shown in the books. When revised value of assets and liabilities are shown in the books. Assets and liabilities are shown in the revised value in the books and even in the balance sheet. A revaluation account is open to record the increase or decrease in the value of assets and liabilities. The other name for revaluation account is Profit and Loss Adjustment account, and this account is a nominal account. We will see how to record in the revaluation account. It should be credited with increase in value of assets and decrease in the value of liabilities. And revaluation account should be debited with decrease in value of assets and increase in the value of liabilities. If there is any unrecorded assets, it should be credited, and if any unrecorded liability, it should be debited on the revaluation account. The profit and loss arising from the revaluation account is transferred to capital accounts of all partners in the old profit sharing ratio. Now we will see the journal entries to be passed to record the revaluation of assets and liabilities. First one is for increase in the value of an asset. The journal entry is concerned asset account debit to revaluation account. For the decrease in the value of an asset, revaluation account debit to the concerned asset account. For increase in the amount of liabilities, revaluation account debit to concerned liability account. For decrease in the amount of liability, so liability account debit to revaluation account. And if there is any unrecorded asset, that concerned asset account debit to revaluation account. And if any unrecorded liability, revaluation account debit to that liability account. Then for transferring the balance in the revaluation account, if there is a profit in the revaluation account, it should be transferred to all partners in the old profit sharing ratio. And the loss, if there is any loss arises in the revaluation account, that also should be transferred to all the partners in the old profit sharing ratio. Children, this is the format of the revaluation account. So if there is any increase in the asset, it should be credited, and decrease in the liability should be credited. And if there is any decrease in the value of the asset, it should be debited, and any increase in the value of the liability should be debited. The difference between the revaluation account should be transferred to the partners in the old profit sharing ratio. In revaluation account, there will be either a profit or loss. Now we will see how to pass journal entries and prepare revaluation account. Ramya, Sarah and Tara, they are partners sharing profits and losses in the ratio 5:3:2. On 1st April 2018, Tara retires. The adjustments are as follows. increase in the value of premises by rupees 40,000, depreciate stock by rupees 3,000 and machinery by rupees 6,500. Provide an outstanding liability of rupees 500. So pass journal entries and prepare revaluation account. Children, we have to record the journal entry. The first step is that you have to write the format. Date, particulars, debit, credit. So the first journal entry is for increase of the value of premises. It is 40,000. So premises account, that concerned asset account, debit to revaluation account. And the second one is decrease in the value of the assets, and there is an outstanding liability recorded. It should be recorded. So revaluation account debit to stock decreased by 3,000, to machinery 6,500 and outstanding liability 500. And this journal entry, the third journal entry, has to be posted after preparing the revaluation account and find out whether there is a profit or loss on the revaluation account. So revaluation account, here on the revaluation account there is a profit of 30,000 and it should be distributed to partners in the old profit sharing ratio. So revaluation account debit 30,000, to Ramya's capital account 15,000, to Sarah's capital account 9,000, to Tara's capital account 6,000. So now you have to prepare the revaluation account. By premises, there is an increase in the value of the asset. Increase in the value of an asset should be credited. So 40,000. To stock, decrease in the value of an asset 3,000. To machinery 6,500 and to outstanding liability 500. So there is a profit of 30,000. Now the next problem is Prabhu, Raghu and Siva. They are partners and they are sharing profits and losses in the ratio of 3:2:1. Prabhu retires on 1st April 2017. So the following adjustments are made. Increase in the value of building by rupees 12,000. Reduce the value of furniture by rupees 8,500. A provision would also be made for outstanding salary for rupees 6,500. So children, you have to pass the journal entries and prepare revaluation account. Journal entries. The first journal entry is for increase in the value of an asset. Here the value of an asset is building. Building account debit to revaluation account. The amount is 12,000. The next journal entry is for decrease in the value of an asset. So here the furniture is decreased to 8,500. So revaluation account debit to furniture 8,500 and there is an outstanding salary to outstanding salary account. So revaluation is 15,000. So reduction in the value of furniture and outstanding salary accounted. And this journal entry is after preparing the revaluation account. In the revaluation account, there is a loss of rupees 3,000 that is transferred to the partners in the old profit sharing ratio. So Prabhu's capital account debit 1,500, Raghu's capital account debit 1,000 and Shiva's capital account debit 500 to revaluation account 3,000. Children, now you have to prepare the revaluation account. So first write the format debit credit. By building account how much? 12,000. To furniture decrease in the value of an asset 8,500 and there is an outstanding liability. So to outstanding salary account 6,500. So there is a loss in the revaluation account because the debit side total is 15,000 and the credit side is 12,000. So there is a loss of rupees 3,000. Children, so far we have seen how the assets and liabilities are revalued during the retirement and death of a partner. Now the question is, write any 5 transactions that may increase the profit on revaluation. Children, write down the answers in your accountancy classwork. Take 5 minutes time and complete the answer. After completing the answer, watch the remaining video. Now the next sum is John, James and Raja. They are partners, sharing profits and losses equally. Here children, the balance sheet is given. So office equipment, machinery, sundry debtors, less provision for doubtful debts, stock, cash at bank. And the liabilities, the capital accounts of John, James and Raja are given 80,000, 60,000, 1 lakh. So the total is 2,40,000 and there is a sundry creditors 1,20,000. So Raja retires on 31st March 2019 subject to the following conditions. Machinery is valued at rupees 1,30,000. Value of office equipment is brought down by rupees 2,000. And provision for doubtful debts should be increased to rupees 3,000. Investment of rupees 25,000 not recorded in the books is to be recorded now. Children, you have to pass necessary journal entries and prepare revaluation account. Now we will record the journal entry. The first adjustment is machinery is valued at rupees 1,30,000. Children, the book value of machinery is 1,40,000. It is given in the balance sheet. So the value of machinery is decreased by rupees 10,000. So revaluation account debit to machinery account, decrease in the value of an asset. And the value of office equipment is brought down by rupees 2,000. So there is a decrease in the value of an asset. So it should be revaluation account debit to office equipment 2,000. And provision for doubtful debts should be increased to rupees 3,000. So the provision for doubtful debts is already 2,000. Now it has been increased to 3,000. So there is an increase in the value of an liability. So revaluation account debit to provision for doubtful debts 1,000 rupees. So the total of revaluation comes to 13,000. Depreciation on machinery and furniture and provision made for doubtful debts adjusted. And the next journal entry is for unrecorded asset. So investments account debit to revaluation account. The amount is 25,000. And the next journal entry is there is a profit on revaluation account is transferred equally 1:1:1. So revaluation, the next step is you have to prepare the revaluation account by investment account. That's an unrecorded investment 25,000 and 2 machinery decrease in the value of an asset, 2 office equipment decrease in the value of an asset, 2 provision for doubtful debts 1,000. So there is a profit of 12,000 that is transferred to John's capital, James capital and Raja's capital in the ratio of 1:1:1. Now, when revised value of assets and liabilities are not shown in the books, in that case, assets and liabilities are shown only at their original values and not at the revised values in the books and even in the balance sheet, which is prepared immediately after the retirement of a partner. And the net results of revaluation is adjusted to the capital accounts of the partners. And memorandum revaluation account, and this is a temporary account, is opened when the revised values are not to be shown in the books of accounts. Children, these are your homework problems. You have to do your homework sums only in your accountancy classwork. Children, watch the supplementary video, play the Kahoot and complete the test before 11 p.m. on the same day. Thank you, children. Have a nice day.